Hello and welcome to Halftime Report on CNBC TV 18. I'm Ekta Batra working from home and we have Nigel D'Souza in the studio. Well, Nigel, we can feel the excitement ahead of the budget. We have the economic survey today. But as of now, the markets are playing it quite cool. We have the Nifty and the Sensex which are consolidating. But we have seen a reasonable amount of profit booking which has taken place in the past couple of days. And the mid-cap index outperforming. Lots of result reactions. That seems to be the theme besides the economic survey. Nigel.
Okay, all right, Ekta. Well, first up, let's run our viewers through all the top stories at this hour. The Sensex and the Nifty bounce in and out of the green following big swings in global equity markets overnight as some fear around selling by hedge funds abate. Auto and realty stocks gain. The mid-caps outperform.
The stocks of Shriram Transport Finance and TVS Motors gain after good results. On the losing side, Mahindra Finance slides after disappointing show, while Lupin slips on concerns over one-offs and uncertainty over the outcome of US FDA inspections. Okay, and well, let's just focus on a couple of more. CNBC TV 18 learns that the OFS of Tata Communications is likely in February, indicating the clear intent of the government to speed up divestments. The stock of BPCL 2 gains. Ahead of the tabling of the economic survey, CNBC TV 18 learns that the government may go with a GDP assumption of 11% for FY22. Also, the survey is likely to be built around the theme short-term pain for long-term gain. Okay, so those are all of the top stories that we're tracking at this hour. For the markets, it's quite stable. And like we've mentioned, it's peppered with a lot of result reactions. We just had Dr. Reddy's, which was reacting to its numbers. In fact, that stock is now still down around 1.6%. So profit booking seen post its Q3 numbers. But TVS Motors reported what was a good set of numbers. We do have Sonia joining in with all of the details on what seems to be record statistics for the company this quarter.
Absolutely. So TVS Motors up 10% on the back of stellar numbers reported by the company. Record high margins, EBITDA, profitability and revenues for the company, and beat the street as far as estimates are concerned. So if you look at it, the revenues went up 30.7% for TVS Motor, coming in at 5,391 crores. The margins have picked up pace to 9.5% versus 8.8%. And the core EBITDA at 511 crores was up 40% year-on-year and hit a record high. Not just that, the company has also generated free cash flow to the tune of 1,616 crores. And they mentioned that this money will be used to pay off their debt. So that's a positive as well. The volume growth in this quarter was very strong for TVS Motor. Overall volumes went up 20% year-on-year. It was a 14% quarter-on-quarter bump up. And if you look at the volume trend, it is a multi-quarter high as far as volumes are concerned at 9.89 lakh units. The trend will come up for you on your screen. Of course, the stock has rallied quite a bit as well. So the stock is now up about 120% from the lows that we saw in the month of March.
Okay, all right, Sonia, thanks so much for that. Well, there's some big news that's coming now on the Bloomberg wires as of now. In fact, there are some statements that are coming in there from Saab. That's a Swedish company that was in the, in talks with Tata Steel for their Netherlands assets. Now, the details that are coming in there, they are saying that, in fact, the synergies in the deal would not fully justify the cost. And the last line that has come in there have said that Saab, they've ended talks with Tata Steel on the Ijmuiden steel mill purchase. And on the back of that, the stock has seen a sharp correction. Remember, there was some speculation that, they may not go ahead with this particular deal. If that's the case, we're still to hear from the management. But if we're going by what is being flashed on Bloomberg, if that's the case, it's a big negative. And that's why, in fact, the stock has corrected. Yes, the stock has corrected close to around 20% from the recent peak. But keep in mind that this was something that would really drive their business. Why is that? Because the street is working with nearly around 20 to 25,000 crores in terms of, getting for this asset out there. So if this falls through, then it'll be a negative. And that's the reason why, in fact, the stock is under some pressure. Ekta.
Okay, well, Nigel, any sort of estimates in terms of what it could have brought to the table for Tata Steel? Because like you can see, the stock is reacting quite negatively at this point. And I know it's just off the cuff, but if you remember any sort of numbers here.
Absolutely. You know, Ekta, for them, the Tata Steel, the Netherlands unit, that's the unit that, in fact, you know, is their cash cow. The European business is divided into two. One is the UK unit and one is the Netherlands unit. Now, they got into talks with SAP to go ahead and, in fact, sell the Netherlands unit. Now, the street was working with roughly around, roughly around 20 to 25,000 crores at least that they could realize from this asset. Now, if that was the case, the current debt in Tata Steel's books is roughly around 95,000 crores. Very, very rough numbers, I'm giving you. And if this deal went through, then the debt would come down to around 70,000 crores, which would be splendid, right? Such a big reduction in terms of their debt. So by this, this has come as a rude shock. This time around, the street was confident that what happened in the past with ThyssenKrupp, it will not happen again because there was no overlap. But the statements that we are getting, are indicating that that SAP, they have cited that, the cost synergies are not really there out there. And in fact, on the back of that, that's the reason why this deal is likely to, the talks have likely to have ended. And the stock is reacting negatively. We're still to get an official statement coming in from Tata Steel as of now. But this is what we are picking up from Bloomberg wires. And this will clearly be a negative. One being because the debt hasn't come down. Why was the street excited first with regard to this deal? One being that, in fact, the debt would come down. The second factor would be then, in fact, they had to only focus on the UK asset. That's the one that's really bleeding. But the street was optimistic that there could be some resolution that will come out there. And if the debt comes down, then the street was saying that, hey, now Tata Steel will be focusing on their core India business, which makes much higher EBITDA per ton. So this will go down negatively. We're still to receive an official statement coming in from Tata Steel. But as of now, this is what the street is reacting to. And on the back of that, the stock has seen a sharp downtick. We're getting some details coming in from the CEO as well. They're saying that, in fact, they cannot align Tata Steel's Ijmuddin unit with the sustainability strategy on the way ahead. So I think the writing's on the wall now. The CEO is saying of SAP that it would not fully justify the cost. And the street's biggest fear has come through. Yet again, this deal has fallen through. And that's why, in fact, as we speak, the stock is under pressure as we speak. We're trying to get an analyst. I'm sure our team is working on that because we've been having these flashes running for a bit on the screen. So short point, debt doesn't come down. The core focus doesn't move to the India business. And on the back of that, as we speak, stock under big pressure. It's corrected 20% from the top, but this has really come out of nowhere. So the stock under pressure as we speak, Ekta.
Okay, so the transaction does not justify the cost. So that is the basic crux of it. And negative for Tata Steel because the debt would not come down going forward. So we will get an analyst soon enough to discuss this more in detail and what the impact would be. Tata Steel, as you can see, that stock is close to the low point of the day, down around 2.5 to 3% odd. But let's get back to numbers and we'll get back to the Tata Steel story in just a bit as well. We do have Sonia who's waiting by to tell us about the Interglobe numbers as well. The losses have narrowed there.
Absolutely. So the losses have narrowed for the third straight quarter now for Interglobe Aviation. It's still a loss, but a net loss of 620 crores is what the company has reported in Q3 versus a loss of almost 1,200 crores in Q2 and 2,800 crores in Q1. So the losses have come down quite a bit. Not just that, the balance sheet is quite strong for Interglobe Aviation. So total cash of almost 18,360 crores is what the company is sitting on, and a free cash flow of 7,444 crores. Having said that, Q3 has been a weak quarter if you look at it on a year-on-year basis. The revenues are down 50%, the EBITDA is down about 50-odd%, and the yields have fallen 4.6% year-on-year as well. Brokerages have come out with some notes. Morgan Stanley has an overweight with a target price of 1,852 on Interglobe Aviation. They say that Indigo is working towards lowering its unit costs. The competitive position of the franchise is definitely improving. Goldman Sachs has a buy, but they've cut their target price to 1,860. They say that Interglobe Aviation is their preferred aviation stock and the balance sheet strength is much better than peers. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, we have Abhishek as well, who's joining to tell us about Shriram Transport as well as Mahindra & Mahindra Finance, both of them moving in opposite directions. Abhishek, over to you.
Well, Nigel, you know, both are on opposite end in terms of not only stock movement as well as the results. While Shriram Transport reported a strong set of numbers, that disbursements are much better than the pre-COVID levels. In Q3, the disbursements grew by 10.5% YOY and about 95% quarter-on-quarter. The pro forma gross NPA, that is without taking Supreme Court dispensation, improved by 15 basis points on a sequential basis. So it's got a thumbs up from all the brokerages. You know, CLSA has upgraded the stock to buy from outperformance, and they've raised the target price to 1,450. They've also upgraded their EPS estimate over the next few years anywhere between 16 to 48%. Goldman Sachs has a buy rating and target price is now increased to 1,380. They have also, you know, improved the EPS estimate between 12 to 19% over the next 3 years. Citi has a buy rating with a target price of 1,200. Morgan Stanley overweight rating with a target price of 1,370. Coming on to M&M Financial, on the other hand, they reported a gross NPA ratio spiked up to about 10% versus 7% in the previous quarter, and they made heavy provision which resulted in net loss of about 274 crores versus our poll of a profit of 277 crores. So brokerages have a mixed view over here. Goldman Sachs retained their sell rating with a target price of 126 per share, and they've revised the net income estimate by 18% over the next 3 years. Morgan Stanley has an overweight rating with a target price of 215. They say that the provisions made are good to strengthen the balance sheet. Citi has a buy rating with a target price of 197 per share. Back to you.
Okay, all right, Abhishek, thanks very much for that. So those are a couple of stocks in focus. As of now, we need to take a break with the news that, in fact, Tata Steel is now grinding lower. It's at the low point of today. But separately, we do have Pidilite, which is in focus. They reported what was a stellar set of numbers. It was 40% in terms of margin. So we're going to get talking with the management on the other side and ask them what they did right.